Alright, welcome back to the Bell Report. Today I want to go over some candlesticks. I want to go over support and resistance lines and what they are, how you judge where you're going to put your support and resistance lines. Then I want to talk about trend lines, and then on top of that I want to talk about consolidation. So first thing I want to go to is candlesticks. Alright, so you got your bullish candlesticks, your bearish candlesticks. These right here are your candlesticks. Got your green is your bullish, red is your bearish. Okay. You can see right here, these are your wicks. This is your high. This is where the price closes on a candlestick. This is where the price opens on a candlestick. This is the low, where the price was trading the lowest on the candlestick at the bottom of this wick here. Same thing on a bearish candlestick. So for example, here we have a high of $56.20. So that would be at the top of that green candlestick, be at the top of that wick. The closing price on this candlestick was $56.10, would be at the top of that green candlestick. The open would be down here at the bottom of the candlestick at $55.79. And then we have the low, which is the bottom of that candlestick on the wick there. And the low for that was $55.67. So a candle gives you a lot of information. It's really important that you learn how to read candlesticks and what they're doing. I mean, as you can see here, we had a potential of the stock being able to move up. We had a potential for the stock to go way down. Okay, but we had a red candlestick that would have showed me that there was a chance that the stock could be going down, and as you see here, it had a complete sell-off, sold off, and it kind of picked back up, and it went into a little bit of a consolidation phase, which we'll get into later. Now, the candlestick helps traders gauge the emotion surrounding the stock or other assets, helping the trader make better predictions on where the stock may be heading. So that's why it's very important to learn how to read these. Now, these lines I got all over the place here. Fix that, what I just messed up over there. Put that back in there. Okay. So all these lines going across the screen here, that's your supports and resistance lines. The ones on the bottom of below the stock's price is your supports. Now, support and resistance, they're drawn at the bottom of the close price, and resistance lines are drawn at the top of the peaks of the price targets. Okay, so pull up this picture here. See a pattern here on the stock. Stock goes up, it got to this point, it came down, got to this point, and it kind of just did the same thing. So up here is where a lot of people, when it gets to resistance lines, it's being rejected and people are selling. Like, you got swing traders, day traders, people like to take their profits and get out. But the buyers are not letting it break the support. The buyers are comfortable at paying this price for the stock. Okay, so you look for patterns when the stock goes up and down, and you look for the wicks on the candles, and you're going to draw your support lines and your resistance lines in. Now, when a stock moves above your resistance, okay, and it usually breaks through resistance, usually you have a good bull run. You want to try to get in around this point here. When you get in around this point right here, usually the stock takes off, finds the next resistance, establish that resistance, and then it'll come back down, and now this resistance is now support. and then we'll have it moving sideways again until the next breakout. Or the opposite could happen here, and it could break through support and come back down, which would make this support here become resistance again. Okay. So right here, you can see where I kind of just threw some lines in here. Get rid of these, be able to see a little bit better. You can see we're like this line here at $54. It gets around there and it comes back up. Here at one point it was a resistance line. Another one we got right here at $56. It touches 56. 56 is a pretty good $56 is a pretty good resistance line. I mean, it keeps moving across, touched here, 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 pretty much here, here, and then over here, got below it just for a little bit. Then we have another one up here at 56, 57. It's also another strong support line. Currently right now, we are bouncing in between $54 and $56 here. This is NEO stock, by the way. I'm doing NEO because this is a stock that I'm into and I keep an eye on a lot. It's what I have a lot of money invested in. But it looks like we're trying. We really are trying. I mean, we're not even bouncing down to this support here. We're really trying to break the resistance here at 56. But that's just a quick, thing. I'll show, like right here, we got another one. Once we break through here, we'll be fighting 56. We'll be fighting 56, 60, and once we break that, our next challenge would be $58. All right, I want to say it's probably about 57. I don't know, but $58. That's where it seems like it's having a hard time getting through and staying above. Around here, we got above it. I believe right here we got above it. I believe, oh, this was aftermarket hours, pre-market, after hours. But you see, we immediately had a sell-off and a downward trend. So trend lines, we're going to get trend lines. A trend line is when you connect points, at least 2 points on a chart that usually extends to identify sloped areas of support and resistance. So this one right here, this standard trend line, you see you got a point here hitting, point here, and a few times up here. What stocks usually like to do is, as you can see, it comes, they usually hit the standard trend line and they'll jump up. Here we had a little bit of a downtrend. 2 points kind of met together, bounced in between, and we shot up. This is just patterns. Not every stock does this, but this is what traders do. This is what we look at. And this is what we use to help justify how much money we're going to put on a stock, whether that be a trade option or not. And then you got right here, you can see the pitch of this downtrend shows like it shows how fast the stock can go down. As you see, we had a good run up and it immediately came back down to this support trend line. And then it just ran up and it's been fighting it and just going up. But an overall, even though we didn't see a massive jump here, we're still moving up. So this would be a trend line moving up. NEO, okay. Just for what I have here, and this is a day chart, and this is January 8th all the way up to now. I'm not looking out over the big picture, over the overall big picture of NEO. If you zoom out and you set your trend lines, NEO is definitely on an upwards trend. But right now, we're looking at the downwards trend. We got a little bit of a downwards trend going on with NEO. But we found this support line right here at about $54, $55, and we aren't going below that, which is very good. But the overall trend is coming down, and we're getting tighter here on our support wedges and our trend line. So I'm maybe hoping for a breakout coming in February. Sometime February, I'm hoping for a breakout going towards March's Q4 earnings. Is it Q4 or Q3? I don't know. But trend lines, there's not too much in trend lines. You know, you just find some points going down, and then if you look over a stock over, you know, a year or the last 6 months, this is where you would get your overall picture of the trend of the stock. The next thing I want to get into is the consolidation. So what a stock likes to do is they like to consolidate after big push-ups. Here, had a big push-up, jumped way up, and you see where we came down, followed our trend line. This kind of acted as resistance, and then here, okay, messed that up. And then here we have a consolidation phase here, where it kind of just bounces back and forth on your resistance and support lines. And then we have another one here where it's kind of been bouncing back and forth, bouncing back and forth. I would even say probably another one here. Got a slight one here, a slight one. But when a stock goes into consolidation, it's actually really healthy for a stock. It helps the buyers and the sellers kind of figure out what's a healthy price for that stock. And usually a stock will either consolidate, find a healthy price, and then you'll have some bad news come out, and then the stock will either go way down or a stock will go way up. But consolidation really is when a stock that is neither continuing nor reversing and trades within a limited price range between support and resistance. This is just a video. I'm trying to give you guys a little bit of an idea of what's going on, especially in my other videos. I know I didn't really explain all this stuff out, but this is kind of just like the beginning stages whenever you get into trading stocks, kind of stuff you want to look at. I'll continue to make videos, maybe a part 2, get more in depth with everything, but that's all I got for you guys today. Make sure you leave a like, subscribe, show some support. Make sure you leave a comment down in the comment section. Let me know how I'm doing.